Welcome to DIY Finance Hack. My name is Eddie, and I work in corporate and a passionate part time investor. I started investing in properties from 2009, and 2 years later, I started investing in individual stocks, then dividend paying stocks and LIC before I discovered ETFs. I'm here to share my investing experiences, ideas, and mistakes to make you wealthy with some fun. You'll see some of my videos featuring my pets, favorite places, and things to do. In this video, I will go through why invest in ETFs. What is an ETF? Why invest in ETFs rather than individual stock? I will show you the facts and figures by going through the different websites so you know exactly how to do your own research. I'm going to explain what is an ETF by going to a website. Let's look at one of my favorite ETF, IVV. So IVV, ASX. Let's do and have a look. Now, IVV is managed by an investing company called BlackRock. Let's go to their website. IVV. So it's the ICS S&P 500 ETF. Why IVV? Exposure to large established US companies. So those big companies in the top 500. And this is the investing objective is to provide investor with performance of the S&P 500 index, which is the US S&P 500 index. So it's pretty simple ETF. It tracks the S&P 500 index. Let's go down and have a look at the performance. So this is the annual performance. So the 10 years annual performance is 15.8%. Let's look at the holdings. If you look at the underlying holdings, these are all the companies that IVV invested in. All these big companies in the US. You got Apple, Nvidia, Microsoft, Amazon, Meta, or Facebook, Alphabet or Google, and so forth. Yeah, Tesla as well. Now, let's have a look at another ETF run by the same company, BlackRock. If we go to funds, iShares ETFs. Okay, so this is a good one. So it lists down all ETFs run by BlackRock. If I do um, sort by 5-year annual return, IOO comes on top. So I do like this ETF as well. Let's have a look at IOO. It's the ICS Global 100 ETF. Why IOO? Exposure to a broad range of large international companies. So these international companies, not just the US, and you access 100 of the largest global stocks in a single fund. So this is the reason why I love investing in ETF. You buy one ETF, one single fund, and you invest in a basket of companies. So with IOO, there's 100 companies. Okay, so we know about the performance. Let's look at the underlying holdings. Okay, so it invests in all the favorite tech stocks in the US. If we keep on going, Coca-Cola, keep on going, Toyota, let's keep on going, McDonald's, Keep on going. BHP, so it invests in Australia as well. I'm going to explain why invest in ETF. Why don't we invest in individual stock or actively managed fund? So the best way to do that is to look at its performance. Let's go to the Morningstar website. Investments, investment ideas. Okay, let's have a look at the security type ETFs, and let's look at the full list. And we want to have a look at the performance. Okay, so it has the list of all the ETFs, Australian ETFs, yield, which is the distribution annually. It has the year-to-date return, 1 year annualized, 3 years annualized, 5 years annualized. Okay, and you can sort them according to the 5 years annualized. Let's sort them. Okay, highest being at the top. Just remember, so this is one of my favorite ETF, NDQ, which invests in the Nasdaq 100 companies in the US. So it invests in companies such as Nvidia, Google, Meta, and so forth. And I went through IOO earlier, and I went through IBV as well. So IBV, IOO, Qual is another good company, and of course NDQ. Just remember, total 5 years annualized return for NDQ is 20%. IBV and IOO, it returns about 15% annually over 5 years period. So just remember that that number. Now let's look at other investments. So investments, investment ideas. So rather than, okay, we still can look at the ETF, but let's look at active Australian ETFs. Let's look at this one, the active global equity ETF. So this is the actively managed by a managed fund. We see the full list. Go to yield and performance. 5 years annualized. Sort them. Highest being at the top. There you go. So there's only 3 actively managed ETF that have 15% or more. Okay. Let's look at security type funds. These are all the managed funds managed by expert. So if you look at the active global equity funds, there are 1,184 securities, 1,184 active global equity funds. If you look at the full list, we'll do the same thing. Look at performance, 5 years annualized, highest being at the top. Okay. So all of this, the first page. So page 1 out of 60. All of them is above 15% per annum, 5 years annualized. So they're pretty good. So look at the next page. Okay. If we have a look at the next page, it starts to drop, right? and we're only on page 2. So only page 2, their annualized return is more than 15%, and it's a long list, as you can see. And if you look at the how much fees we have to pay those experts, they're quite high, a lot higher than the ETFs that I've shown you. So again, we just have to look at the performance. It's pretty difficult to beat the performance of the ETFs that I mentioned. I've shown you the performance of ETF IVV that tracks the S&P 500 index and compare the 15% annualized return over 5 years against actively managed ETFs and actively managed fund. And it's pretty hard to beat that 15% per annum return. Now, let's compare IVV with individual stocks. So I want you to do the same, right? Before you make up your mind. Why don't you have a look at other ETFs run by Vanguard? So Vanguard is another famous company that have a long list of ETFs to choose from. Let's look at IVV again. Okay. Just remember 5 years. So this is the total return rather than the annualized return. So the total return over 5 years is almost 100%. So you would have doubled your money in 5 years. And you can do a comparison here. Compare. Let's compare against BHP. 5 years. Okay. Look at that. BHP only returns 29.6%. Comparison. Why don't we compare with CBA, Commonwealth Bank of Australia. 5 years. Pretty good. Yeah, but yeah. IVV still higher over 5 years period. Let's do one more. Let's look at Telstra. Okay, 5 years. Yep. Telstra only returns 10.26%. Okay, so why don't you do a pick your favorite ETF, and you can do comparison. You can compare with other ETFs as well. The lesson learned here is by investing in low cost ETF, an ETF that track the index or ETF that invest internationally, beats individual stock and beats many of the managed funds. Investing in ETF is a simple way to generate wealth over a long term. Thanks for watching. Please do your own research like I have shown you, and happy investing.